Good morning, everybody. It's the 9th of October, Monday the 9th, and this morning I'd just like to do the October 2017 SPY ETF review. Going to look at the S&P 500 ETFs and related subsectors. There's the normal disclaimer. And these are the instruments we'll be covering today. It's the S&P 500 SPY ETF and the S&P 500 SPY ETF subsectors. Okay, jumping straight into the Pro Real-Time platform. I'm going to kick off with S&P 500 SPY. We've had a nice bull trend now since crossing the cloud back in February of last year. This is a weekly cloud chart of the SPY. Cloud remained a key support level throughout this bull rally, and you can see the various consolidations taking place. We're at risk of some price consolidation now. The old highs here is the next new support zone, and that corresponds well with the front-end cloud level here, which is also a support zone to keep an eye on. So these are the, let's say, Q4 support levels that we could see being tested. So there's a possibility for a short-term consolidation move, but we still have a nice steady uptrend from a cloud chart perspective. Price action is taking place above the cloud, which indicates a strong uptrend. And just watch how we have these consolidations. So we do expect the market to come back and retest the 248.50 zone for support before continuing the rally. On the daily chart, we can see very nicely how the cloud acts as key support levels for swing trade rebounds, or rebound swing trades. Yeah, we more recently had 23rd of August, run about there that week. And then again, on the 5th of September, we had a nice little rebound there. MACD signal kept us in the trade, and we had a strong rally. So some profit taking now is on the table, and I do expect the market to consolidate a little bit and pull back to consolidate this move. So we could see a short-term pullback to 251. And then, or 250, and then these old highs here should now act as support. And you can see these high levels here and the front end of the cloud. That 250, 251 zone is a short-term target for a brief correction. But so far we've had a strong rally, price consolidation. Do expect a bit of a consolidation because we're quite far away from the cloud at this point in time. But we still have a strong uptrend as based on the cloud. The front end of the cloud still indicate that we have a trend, positive uptrend. Okay, jumping into the individual sectors, we can look at XLRE materials. Also a nice little strong move, rebounded from the bottom in cloud chart support zone, then found support again. MACD signal came in here in August, and we grinded higher steadily. We're now at risk of a consolidation. Watch out for support to come in here at 56. And this level here, old high here at 57, so we could see a bit of a snapback there and then continue the trend. But so far, watch out for the MACD profit-taking signal up here, but we still have a strong uptrend, and the MACD signal kept us in this trade. So the trade went from roughly about $53, $54 up to where it is now, 57. So a good couple of dollars in that trade. Real estate, struggling, fighting for support at the bottom end of the cloud. Yeah, it's 32 key support zone. Watching out for the MACD signal to come through. Look how it's struggling with the resistance here. Top end of the cloud is not quite coming in as support. Snap back here. So we're struggling. This ETF is really struggling. Front end of the cloud indicate we're starting to see a bit of a downtrend emerging here. So the top end of the cloud should act as the resistance zone now. So we could see the ETF, the price action close below the cloud and continue the trend back down to the support level here. But watching very closely this week to see if the support or the resistance at this level is going to break, and if this XLRE ETF can close above the top end of the cloud chart resistance zone, that would mean it broke that resistance, and that should act now as support. But so far, it looks like it's pretty much struggling with that resistance there at the top end of the cloud. So watching very closely for this 32.44 zone this week to see what that's going to do on this cloud chart. Okay. Next one, consumer discretionary XLY. Nice little strong rally had some trouble here with the resistance to the bottom in the cloud, managed to break past that, past the top end of the cloud, and it's now close to the old highs here. These levels, yes, next key resistance zone. So we could see a bit of a consolidation in and around these levels. But we've had a nice strong rally there. So the upside target there is about 92 to 92.37 for this rally to last up to that level, when we will see once again a bit of profit taking. Like, yeah, it's closer to the resistance zone now. And the support zone to watch out for is the 90-20 zone. Okay. Consumer staples, XLP, price action taking place below the cloud, bit of a downtrend now. Fighting for support of these old lows. If we zoom out, we can see these old lows comes from previous cloud resistance levels as well. So short-term swing trade is potential rebound from this area if support holds back to the bottom in the cloud. But so far, watching very closely to see if this level will break this week. If it goes below the 53.71, it's going to go down much further, because this is a major support zone. The lagging line is still also showing a little bit of trouble here. It's trying to find support in and around these levels. So watching very closely to see if support's going to come in at these levels at 53.70 and 53.65 zone. Upside potentials to the bottom end of the cloud. We've not yet had a MACD buy signal, so the short position here, when it broke past the cloud chart support here, remains in place until this rebound takes us out of the trade. Okay. Energy Select, XLE. Nice little trade here. MACD gave us a buy signal below the cloud, which is a weak buy signal. It rallied then back to the bottom end of the cloud chart resistance, broke past that, ran into old high resistance, pulled back, and then found support at the top end of the cloud, and then continued its rally up. And it looks like we're now going to see a profit-taking signal on a MACD basis, with downside risk to these levels here at $67 and $67.55 is the next key support zone. So watching very closely for the Energy Select ETF XLE to find support in and around these old cloud chart support levels. So watching very closely for that MACD this coming week. Financials, XLF, it's been on a tear. Been above the cloud for quite some time, found support at this retest the cloud here for support, rebounded right back, broke right past the top end cloud chart resistance, struggled a little bit with the old highs here, then managed to break out, breakaway gap from there. Now we've got consolidation risk, consolidation of this particular move, and we could see a retest of these breakout levels here. Let's get a chart on there. You can see a retest of these breakout levels here. So there's downside, a couple of dollars down. Front end of the cloud is a bit far away, so the support level is quite low. And these old highs here, so we should see this gap being closed at some point. But so far, a very strong rally, rebound from the cloud chart support, gave us a buy signal within the cloud, and away we go. So now we're watching very closely to see when the MACD is going to give us that profit-taking signal. So watching very closely there. Healthcare rebounded from the bottom end cloud chart support, strong rally, broke past top end cloud chart resistance. Consolidated a little bit, so yeah, we're watching very closely to see what's this front cloud levels. Get that one there. Is the next key support zone. So watching at 81. What's that level? 81.89 is a key support level to watch if there's a consolidation going to take place. But we've got a secondary MACD buy signal here, so we should see this market grinding higher. Industrials also on a tear here. Found lots of support here at the bottom in the cloud. MACD signal came in very nice signal there. You get the MACD signal and you get the rebound from the cloud support at the bottom in the cloud. So we've got quite a lot of, nice 6%, 7% rally here. Consolidation risk is now, front end cloud is the first level of support, 70.53. So we could see a bit of a comeback here. Consolidation and then continuing the rally. The front end of the cloud indicates the uptrend remains in place, watching very closely here to see when that MACD sell signal is coming through. But so far, a very strong performance from the industrial ETF. Okay. Technology. Had quite a base on a base formation, yeah, a whole consolidation period here in August and then September as well. It broke out of that consolidation range there. It just recently broke out. Front end cloud is the key support, 58.91. So you could see a snapback here and then a continuing of the move higher. But we have a base on a base pattern here. Basically, we've had a MACD buy signal recently, so it's just broken out. So we should see more upside coming from this ETF. Utilities, fighting for support at the bottom end of the cloud at a critical level, watching closely to see when the MACD buy signal will come through. Looking desperately for support around these levels here. 53.92, 53.42 key support zone. The front end of the cloud is indicating that we've got a downtrend emerging. So if the market closes below the cloud, we could see further downside to the 52 level, yeah, bottom end of the cloud, yeah. But at a critical juncture, is support going to come in? So it's going to continue this rally to the bottom end of the top end cloud chart resistance, or it's going to lose support at the bottom end of the cloud and then collapse through to all cloud chart support levels. So we had an inflecting point for this market, for the SPY Utilities ETF this coming week. But back to the S&P 500. You can see a nice strong rally and looking for a slight consolidation here above the 251 zone. And watching very closely to see when the MACD profit taking signal will come in. But so far, nice little breakout out of a base on a base kind of support zone, and steady as she goes, as they say. Until next time, happy trading.